Hi folks, Angie Freyman here. I'm an enrolled agent and I'm a tax manager here at Freyman CPA. And today I'm going to talk to you about a more of an out-of-the-box, unusual tax strategy, a tax saving strategy for dealing with the IRAs. So some of the typical strategies you've probably heard about are things like IRA backdoor conversions to Roth. And that's where you're first putting away money into an IRA, a traditional IRA, and then from there converting it into a Roth IRA, because a lot of people are not allowed to contribute directly into the Roth IRA. Now, that's one strategy, but it has drawbacks. And basically, the drawbacks would be if you have deductible and non-deductible money kind of mixed into your IRA account, when you're converting it into Roth, you're now picking up taxes on the deductible IRA that was sitting there in the past. So you can't just say, I only want to move my non-deductible IRAs into Roth, but I want to keep my deductible in my IRA for the future. It doesn't work like that. You have to move them pro rata according to the IRS rules, and that means that you would need to actually move some, pay taxes on some of these conversions. Now, there is a strategy to avoid that. It doesn't work in every situation, but it does work for some people, and those people should be aware of that and know that there's the strategy that they can implement into their tax plan. So what do we need to do, and what is this? So basically, this is called a reverse IRA to 401k conversion. And what that is let me just take a step back. You've all heard, let's say you work for a company and you've earned your 401k compensation sitting there. When you leave the company, you can close out that account and roll over your 401k into an IRA. Okay, we've all heard of that. Now, what happens if you wanted to do the reverse? Now, this is where you would take your money out of the IRA and move it into a special type of 401k. Your company, your employer has to offer that type of 401k. But if they do, then you are able to move your IRA funds back into a 401k. So when does this come in useful? Let's say you have currently an IRA account that has commingled deductible and non-deductible IRAs sitting there. So what you're able to do is you're able to split those out and take just the IRAs that are deductible, means they're pre-tax IRAs. You can take them and you can move them back into a 401k. What that's going to leave you in the IRA account is just your non-deductible IRAs, the ones that you already pay taxes on. Now you can take that amount and do a Roth conversion on those. And now you've just saved yourself on paying taxes on the conversion, because you've split out the pre-tax and the after-tax IRA funds. You put the pre-tax funds back into the 401k, and you took your after-tax money, the ones that was already taxed, and you converted that to a Roth at no additional cost. So that's basically the strategy. Again, it doesn't work for everybody, but it may work for you. If you're looking to do something like that, feel free to contact us. We have experience for this type of matter, and we can help you and point you in the right direction. If you like our video, please subscribe and give us a like. We really appreciate you guys, and we are glad that you're watching our videos. Thank you. Have a good one.